Hey there, my name is Rainer and welcome back. In this week's market analysis, I'll share with you on how you can actually trade the trend when they're actually conflicting on both time frame, on the lower time frame and on the higher time frame. Because I'm sure you encountered before prices, for example, on the downtrend in the 1 hour chart and in the daily chart, prices in an uptrend. So how can you actually go about it to trade trends when they're actually conflicting with one another? Also, I'll look to cover a couple of trading opportunity on the soybeans as well as on the gold market. I'll see you there. Okay, so this is the weekly chart of crude oil, and you can see that price had a high of about 115 over here and slide down to a low of $42 over here. So looking at the trend on a weekly perspective, honestly, I think most of you can agree that it doesn't look like an uptrend. In fact, it looks like this could possibly still be a retracement in the grand scheme of things. We do not know whether it is a retracement or it could potentially be the end or the bottom of crude oil. Only time will tell. So, but nonetheless, looking at the chart, if you take a fib and you just align it from the high to the lows, you can see that it has retraced all the way till the 23%. It's not even up towards the 38% or even the 50%. So chances are, I do not know whether the trend is over, the downtrend. But looking from a weekly chart, you can safely say that, in the short to medium term, momentum is still towards the upside based on the last 7-8 weeks bullish close over here. So looking at the daily chart, or perhaps even a 4-hour chart, you see that on a 4-hour chart, price is very much clearly in an uptrend. You see a series of higher lows over here, over here, over here, and over here. And you have higher highs here, 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 and here. So it's very clear that on the 4-hour chart, that price is in an uptrend. But however, earlier when you saw on the weekly chart, which I'll go back over here, price doesn't really look like a very strong uptrend to you, or to me at least. Pretty much the downtrend is not, I wouldn't say the downtrend is over yet. So looking at the weekly chart, price is definitely not as bullish as the 4-hour chart. So what do you do when the weekly chart is showing you a downtrend and the 4-hour chart like this is showing you an uptrend? So what can you do? So say for example, a trader wants to trade the 4-hour chart, but the weekly time frame is against him. Say on the 4-hour, the trend is up, and on the weekly, the trend seems to be down. So what can a trader do if he wants to trade the 4-hour chart, but the weekly time frame, the longer term time frame, is against him? So what I would suggest is this. Say for example, a trader is, say he's looking to retest of this support area over here. So say for example, price comes into this support area, got him long over here, and then price traded higher. So if I were the trader, or what I would actually encourage is look to take profits along the way, or even to take all the profits at this key resistance over here. Because the thing is, you are trading against the higher time frame. So you do not really have the wind at your back. Price may go against you and reverse from here, we do not know. But the one thing that we do know is that we are on the right trend on the lower time frame, which is the 4-hour. However, on the weekly time frame is against us. So I would suggest to take profits wherever possible. For example, a key area like the resistance I've just shown you over here, and try not to write your profits and to expect it to go to the moon, because you are after all against the weekly time frame, and chances are price doesn't really have much of a need to move, since you are clearly against the higher time frame. So that's my take on how you can actually trade both the lower time frame when it's against the higher time frame. So up next, I'll share with you a particular trade. Let's look at pound yen. So pound yen, the weekly chart is still on an uptrend. So you can see a very clear series of higher lows over here, 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 and here. And you see that price is now approaching near this key swing high over here. And looking at the 4-hour chart, you see that price right now seems to be forming a consolidation. So there could be a possibility that price may just break out and trade higher, or it could come back lower, retest this swing support area before trading higher once more. And the key difference between the pound yen earlier and the crude oil chart I showed you earlier is that the weekly chart is much more bullish compared to the crude oil chart. Look at the crude oil, this is the weekly chart, and you see the difference between this downtrend and this is an uptrend. And no doubt, on the 4-hour chart on the pound yen and the 4-hour chart on the crude oil, they look somewhat similar. Okay, they're not exactly identical, but they're both in an uptrend. But the difference between both charts is knowing where the higher time frame is, knowing what the higher time frame is doing. So that is key. That is the key whether you have the conviction to let your trades ride. And one caution about the pound yen trade is, to take note that this key resistance over here, where sellers may come in. So if you're looking to trade the breakout towards the upside, bear in mind that this resistance level could provide some selling. So you may want to take perhaps half of your profits at this key level and let the remaining ride. Or you can choose to take everything at this level. Is entirely up to your trading plan and how you trade the markets. But the only thing going for you is on the weekly chart, price is definitely bullish and momentum is at your back as well. So up next, let's look at soybeans. So soybean has been a market that I've been looking for quite some time right now. We have this key support area over here, and you notice that price has been forming lower highs into this support area. Let's not talk about this portion for now. We just focus on this key area over here. So this is the weekly chart, and this was the key support area I've mentioned. And notice that price has formed lower highs over here, over here, over here, and recently over here. It seems to be consolidating right now, just ahead of the support area. So what is price telling you? Well, to me, at least, it's telling me that, the bears are in control. Every time price retraces towards the 20 EMA on the weekly, it gets pushed back down, right? This is the 20 EMA, the 20 EMA, 20, and 20. And right now, price just seems to be trading just above the key support area. So the bulls are definitely as of now being contained by the bears. So I'm expecting possibly a breach of this support below, or even perhaps a break towards the downside. I do not know whether it's a breach or a break. The difference between a breach, right, is basically a false breakout, right? So price basically traded below the lows, taking out the stops, and then trade higher once more. So that's a false breakout, and that's what I call a breach of support. And needless to say, a break of support is where price does something more decisive. It breaks below and trades below for sustained period of time. So I do not know which will happen, whether it will be a false breakout or whether it will be a sustained breakout. But the thing is, I do know is that the bears are in control. They are really pushing the bulls to one corner, and that key support area is a level to actually look for. So if it does break, we'll see that whether it has a sustained move lower towards the downside. And last but not least, let's look at gold. So this is the weekly chart of gold, and again you can see clear lower lows and lower highs. So we have lower highs over here, lower highs, lower highs, and lower highs. So okay, it's not very clear that there is lower lows, but it is also being supported by this key area over here. So right now, one thing to note is that price is at the 50 EMA on the weekly chart, and needless to say, in the grand scheme of things, alright, your bias should be towards the downside because the trend on gold based on the weekly chart is still towards the downside. And looking at the daily chart, we have something pretty interesting, because what you see here is basically a resistance. Alright, you see price testing this resistance once, then it traded lower, then it traded higher once more, tested this resistance, traded lower, traded higher, gap up, tested the resistance once more, then it traded lower, then it traded higher once more, and right now it's at this key resistance area once more. And the interesting thing is that last Friday, we had this pin bar sticking out, showing rejection by the market, right? So basically the bears came in and rejected higher prices. So right now price is near the key resistance area, and it'll be interesting to know whether this area holds and see if price can potentially go back and retest this swing low over here. So this is my take on gold. We are at a key resistance level, and we could potentially see a potential move lower in the coming weeks. So that's all I have for you guys this week. I hope you guys enjoy it. And with that, I wish you good luck and good trading. I'll talk to you soon.